Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today, we're diving into a report from Fortress Credit Realty Income Trust. It's about their net asset value, or NAV, which is basically a company's worth. Prepare for some number crunching because we're about to see how much this trust thinks it's actually worth, and trust me, there's a bigger difference than you might think. This is a Form 8K, which is like an urgent update that companies send to the Securities and Exchange Commission, or SEC, whenever something important happens. In this case, it's about letting investors know the latest value of the company's assets, minus its debts. The date of this report is March 17, 2025, but it's actually about something that happened a little earlier, on February 28, 25. The main point of this report is that Fortress Credit Realty Income Trust is announcing their net asset value per share as of February 28, 2025. Basically, they're telling investors what each share of their stock is worth based on their calculations. Now, there are different classes of shares like Class B, Class R, and so on, and each class has a slightly different NAV per share. For Class B shares, the MEV per share is $20,066. For Class R shares, it's $20.02. And for Class I shares, it's $28.69. Finally, for Class E shares, it's $20.5024. The minor differences in price between the classes has to do with the specific rights that come with each class. Now let's dive into what makes up this NAV. The biggest chunk comes from commercial real estate loan investments, which are worth $42 million. That's a lot of money tied up in loans for things like office buildings, shopping centers, and other commercial properties. Next up, we have investments in real estate related assets valued at $142.978 million. This could include things like mortgages or other investments that are tied to the real estate market. Then there's cash and cash equivalents, which are at $188.91 million. This is basically the company's liquid assets, the money they have on hand that they can use to pay bills or make new investments. They also have $148.88 million in restricted cash. This cash is set aside for a specific purpose and isn't available for general use. Now let's look at the liabilities or debts. The biggest one is secured debt arrangements, which are at $314 million. This is debt that's backed by collateral, meaning the lender has a claim on specific assets if the company can't repay the loan. They also have $133.39 million in subscriptions received in advance. This is money they've received from investors for future share purchases. Revolving credit facilities account for $48.69 million. This is like a credit card for businesses, allowing them to borrow money up to a certain limit and repay it over time. After adding up all the assets and subtracting the liabilities, we arrive at the total net asset value, which is $539.41 million. And with 26,814 outstanding shares, that works out to the NAV per share numbers we saw earlier. Now let's compare this to the previous month, January 31, 2025. This will give us a sense of whether the company's NAV is going up or down. In January, commercial real estate loan investments were at $582.85 million. Investments in real estate related assets were at $78.279 million. Cash and cash equivalents were at $73.693 million. Restricted cash was much higher in January at $222.40 million. Secured debt arrangements were at $340.618 million. Subscriptions received in advance were also higher at $207.114 million. And the total net asset value in January was 332 outstanding shares. The Class B shares in January were priced at $23,777. The Class R shares in January were priced at $20.2096. The Class R shares in January were priced at $20.304288. The Class E shares in January were priced at $20.1942 FTO. What does all this mean? Well, it looks like Fortress Credit Realty Income Trust's EVE increased significantly from January to February. A big part of this seems to be due to the increase in commercial real estate loan investments and a decrease in subscriptions received in advance, while most share classes were valued slightly less at the end of February versus most likely due to the company having more outstanding shares. Overall, the company more than doubled the total NAV, which means things are looking good. However, one thing to note is that the restricted cash decreased a lot from over $222 million. We don't know exactly why that is from this report, but it could be something investors should keep an eye on to make sure they are staying aware of this company's financials. Overall, based on these numbers, Fortress Credit Realty Income Trust seems to be heading in a positive direction, growing their investment holdings. A potential weakness could be the debt levels. However, as long as the real estate market they operate in remains stable, the risks would seem reasonable. It will be key to keep an eye on how their investments in real estate loans perform. If those loans start to go bad, that could quickly eat into their NAV. So, there you have it, a look inside Fortress Credit Realty Income Trust's latest NAV report. Hopefully you now have a better understanding of what NAV is, how it's calculated, and what it can tell you about a company's financial health. Thanks for watching Corporate Decoder. If you found this video helpful, please hit that like button, leave a comment and subscribe for more deep dives into the world of business. What company would you like to see decoded next? Let me know in the comments. Until next time.